Savers look set to be hit once again, but borrowers may be about to enjoy some of the lowest mortgage rates ever. That's after the Reserve Bank boss, Philip Lowe, gave another strong indication last night that his board may cut the official cash rate again next week to the lowest on record. The drought has hit farmers like Sally Jones.
Mate, it's some of them are really doing it tough.
A milk crisis in Victoria's Gippsland a few years ago also didn't help. But an interest rate cut may.
If we get any savings from interest rates, we will most likely be putting that straight back into our business.
That could be on the cards. Speaking in Armidale in New South Wales overnight, the Reserve Bank Governor recognised that Australia's economy is going through a soft patch.
We didn't expect this slowdown to take place, so it's come as a bit of a surprise to us.
Consumers aren't spending, wages aren't growing fast enough, and workers are wanting more hours. The international environment is also a concern. The US-China trade dispute, along with Brexit, for example, pose risks, forcing central banks like the US Federal Reserve and the European Central Bank to cut rates.
We live in an interconnected world, which means that we cannot completely insulate ourselves from long-lasting shifts in global interest rates.
That tends to put pressure on the RBA to also cut interest rates, because if they don't, then the Aussie dollar tends to go up.
HSBC's Paul Bloxham has brought forward his rate cut expectation from November to next week, with another one to come in early 2020.
Growth is below trend, the unemployment rate isn't falling, and inflation is below target.
Lower interest rates won't help those living off the interest earned on their savings.
If you want to get value in the market right now in savings, you need to look for an account with a good ongoing bonus savings rate, so not a rate that drops if you take your money out.
Although a few weeks ago the RBA said the proportion of those impacted is small.
But if we look at the aggregate effect it has on the national economy, it actually does boost the economy, because there are more households with debt than there are with deposits.
An official interest rate cut is likely to further intensify competition in the mortgage market, with the potential for some home loan rates to start with the number 2.
If you look at the bottom of the market now in terms of standard variable rates, they're around 3.09%. If we do see a cut, they're going to drop below 3.
The big banks have recently slashed some of their savings and fixed mortgage rates, indicating they expect the RBA to move on Tuesday. Many have also reduced their mortgage serviceability rates, which is used to assess whether a borrower can afford to repay a loan, as requested by the banking regulator.
Sydney and Melbourne are seeing a rise in prices, and if we get further cuts from the RBA, as we expect, we think this will continue to support house price growth over coming quarters.
While many borrowers will opt to pay down their mortgage, the RBA will be hoping some of those savings is injected back into the economy.
That I can save up that money for other things, family holidays, school, kids' education.
To help reignite growth.